The ninth item on the agenda is to consider and, if thought fit, pass the following resolution. Subject to approval by the Capital Markets Authority to allot 140 million ordinary shares of Kenya shillings 0.05 each out of the authorized but unissued share capital of the company to the trustees of the KenolKobil Employee Share Ownership Plan. Now, may I have a proposal? But again, if there are questions, and I know Mr. Ndugu wanted to ask a question on that.
On the ESOP, I think it would be fair to shareholders to explain why this amount, what's the rationale. At the moment, I noticed that ESOP have 0.65% of the shares in the company, and now you're proposing to raise this threshold to 10%. I don't know the exact mechanics of how the shares are allotted. Are they going to be issued and subsequently immediately? Are they going to be issued immediately and therefore going to dilute our shareholding, the shareholding by other members? And generally, the statements that are in the on the annual report relating to the ESOP are not very explanatory, because I see statements to the effect that these are allotted at the director's sole discretion. We don't know what performance benchmarks may have been set, and what are the prices. At what price do the employees buy these shares at? I recognize, of course, that it's actually a very noble endeavor to align the interests of shareholders with the interests of employees to the shareholders. The history has actually been pretty good in that respect, but it would be fair for us to get a more detailed explanation. Thank you.
My concern is, since there will be an effect of dilution, what is the board doing to address that dilution? Thanks.
The dividend this year is really nice, stronger than in the past, but it is for a reason, and I'm willing even to talk about it, to explain it. And I may do it now to kind of make sure that there is no misunderstanding on that very same issue. The reason is, if you recall, when we published the first half of 2010 results, we said we will not issue any interim dividend, as the practice been. In most of the years, we issued twice a year, the interim and then the final. The reason we didn't do that, because we were negotiating on a big set of assets, and I can tell you it's been in the open, and we were negotiating very close. We were actually second bidder on the BP assets in the 5 countries: Tanzania, Malawi, Zambia, Namibia, and Botswana. We wanted very much to go for these assets, and we put a bid very strong. We knew that at that time, we knew very well that we will have to raise financing. So we said, let's reserve it. Now, knowing that this deal was not concluded with us, and the difference between the winner and us was quite big, I tell you frankly. And by the way, it's another positive sign. I'm sure you know who bought these assets. It's a group called Trafigura through their subsidiary called Puma Energy. It's a trading house, a very big trading house. It is a good sign because it shows there is a lot of interest from trading houses in the downstream assets. And this is followed by Vitol, who is coming into this business. So I think as a shareholders, you should see an upside there, and of course a potential appreciation of your share when it comes to such a very big multinational trading houses coming and putting money in Africa. So nothing to do with it. We are not trying to please anyone or have any correlation with the dilution.
You know, the whole ESOP scheme was actually tabled at the AGM in, I think, 2002, where the shareholders actually approved it, because it's a common way that multinationals actually remunerate executives as well. Our trust scheme, as Mr. Segman, the ESOP scheme, as Mr. Segman said, is split into two. The employees one, which is not affecting this, because normally employee gets given the shares, but the executives are given the options. And the options they have to pay for. The strike price is set around 9th of December every year. And if they want to exercise the options, they have to pay the strike price and then can sell it at market value. You all know that in 2008, the whole NSE collapsed. In many countries, it was a global crisis. So the share prices actually collapsed totally below the strike prices. Of course, there's been recovery, but not to the levels that we saw in 2007 and before that. So the board then approved a longer exercise period. Instead of 1 year, we went out and investigated what other multinationals were doing, as Mr. Segman said, and we saw that companies did between 5 and 10 years. We went the middle of the road and said, okay, we will keep the options open for 5 years. Now, with this keeping of the options open, it's actually kind of accumulating the share options that may be taken up should the market recovery to market price levels that will suit the executives. And if that happens, they will exercise their options and most likely sell the shares back to the trust, in which case less will have to be issued as new shares. So that's basically how it works. And when the ESOP was approved by the shareholders in 2002, we had set a limit there to say that not more than 10% of the issued share capital should be issued to the ESOP scheme. So I think shareholders must appreciate that it's still within the limit that was set and approved by the shareholders when the trust was first set up.
I believe we answered that question, and I would like to ask a proposer, please.
Ndungu DK, I propose.
Thank you. May I have a seconder, please? Please.
Kibutu GN.
Kibudu.
I second.
Thank you. All in favor? Thank you. As we have now concluded the business of the 52nd Annual General Meeting, I declare the formal business of the meeting closed. Now, two things before we leave the meeting room. We usually allow, and this has been the practice of KenolKobil board and management, we allow general questions about KenolKobil, anything you wish, oil industry, whatever, please raise it.
Discovery of oil in Uganda, how will that affect our business?
Okay, any other one? Let's take another, yes, please.
When you're talking about we were pursuing to buy another deal and it failed last year. This is why we did not issue the interim dividend. Now that we don't have any aspect of buying another deal in the market, are we getting it that we are going to resume the earlier trade of getting the half-year dividend and the final year dividend?
Okay, we take another one question. and we close with the answers.
My question is, how is our company ensuring that we are keeping ahead of the others?
Okay, we have 3 questions and we take them quickly. We start with the question from Mr. Olo regarding the oil in Uganda. First, it is a real discovery, just to tell you, in all scales, 2, maybe 2.5 billion barrels, waxy oil. It is something which we are very happy for Uganda, needless to say. The effect, I think there will be quite a number of aspects more in respect of the Kenyan economy, the Kenyan pipeline, Kenyan refinery, not refinery, these issues. But when I'm sure your question was the effect on us, on KenolKobil. We've been very much following it. Depends on which way they will choose to go. Whether they will export it as a crude oil, like some of them are proposing, that will require a major pipeline all the way to the Indian Ocean coast, whether it is Mombasa, Lamu, I don't know. What I do know is that this pipeline is not a simple pipeline. It will require heating a system all over. And that is a major cost item when it comes to their, to considering whether to export it as crude or not. If they do go for what they are planning, or at least some of them are talking about, to put up a refinery close to Lake Albert, then of course it will have a positive impact on us, at least within the let's say the Ugandan, Rwanda, Burundi, Eastern Congo market, because we will be buyers in this market. Actually, they've already approached oil marketing companies in Uganda to check with them whether they would be interested in buying products, what quantities, and so on. We have given all this data to them. If they do choose to go for that refining, which I think that's going to be the way, because I am told that Total is involved there, Eni is involved, Eni is another major Italian oil company. Of course, we'll be buying there and we'll use less the infrastructure of Kenya, which, as you all know, we as KenolKobil, we've been using it much less than others. So it's only going to be positive for the region economy, positive for the downstream oil players. We'll have it close to the market instead of transporting it whether by road or pipeline as it is today. But that will take some years, of course, all of it, actually, all the discoveries are within the lake itself. So it's not going to be that simple, but I think they've already put their modalities of extracting this oil. The only thing we can say that we hope for Kenya as well to find. I can tell you that in other countries in East Africa, there are some interesting findings, like in Tanzania. There are 2 major gas discoveries, which we are following as well. I can tell you one of them is already being used, Songo, and there is another one which they are planning to put a pipeline and produce power and so on.